Hi, welcome to Bond Bytes, the daily bond market highlights from INR Bonds. I'm Arjun Patsarthi, and in today's market, we are talking about the 10-year gsec yield that is slightly down. The equity markets were higher, and the rupee was flat. And in state development loans, the auction cutoff came in at 7.7%. But gsec yields have practically been higher, trending higher. And in this bond bytes, we're going to particularly talk about Powergrid InvIT. Now, since INR Bonds is a bond platform, and we relate to all that is fixed in all that is bonds, we get many questions on InvITs and the rates, and Powergrid InvIT, especially since there's been a lot of volatility in the prices. However, InvITs are not traded on bond platforms yet, and it's traded on the cash market. And investors who want to invest in InvITs will have to go to the equity market broking account to invest. Having said that, we will specify what the InvIT is and why it's so volatile and what all risks you need to watch out for before taking an investment decision. And Powergrid InvIT since IPO has gone up from around 100 to went up to 140 and has come back all the way to 100 rupees. So investors who have invested at higher levels have lost a lot of money, though investors who have invested at the IPO around 100 or even slightly higher have gained from the dividends. So basically, what are InvITs? And we have had a very long educational session on InvITs earlier when they came out. You can check out all our educational on INR videos on INR Bonds channel. Please do subscribe if you're not subscribed already. And InvITs are basically assets, performing assets, where cash flows are where the money collected from investors are invested in performing assets, and those cash flows from those assets are distributed out as dividend. Very simply put. And Powergrid came out with this IPO, and they monetized about 5 of their assets, and all that cash flows is being paid out at dividend. So last 3 years, the dividend they paid around 12 rupees plus dividends every year, which is very good in yield. But having said that, the market overreacted, and the prices of InvITs went up in the equity markets, and it went up from 100 to 140 maximum. But obviously, there was a lot of euphoria, and then a lot of things have happened, and it's come down. So basically, what has happened is that the cash flows have remained same. The dividend yields have been pretty much same. So if you look at it as a bond, if you had invested 100 rupees, you would have got every year around 12 rupees, which is 12%. So basically, if you watch it, you look at it, you're getting a Powergrid credit, that is a AAA credit, at a yield of 12%. But since it is an InvIT, it's not as easy as that because it's carrying some equity risk. And this particular cash flows are not assured. They are dependent on many factors, including the performance of the assets, the ability of the issuer to grow and buy more assets and generate more returns for investors, and also the long-term longevity of these assets, which they're not infinite longevity, so they have a maturity value as well. So investors should look at what is the payback period, and Powergrid said that in the next 5 years they will pay out 12 rupees consistently, which is pretty good because if you really look at it, somebody had bought it in 5 years, they get back 60 rupees of their investments, and assuming in the next 10 years they get back more than that, much more than that. Then the dividend yields are good. So if they're looking at it as a bond for a long-term bond, then you have a very steady cash flow. But like I said, there are a lot of risks as well. And given that it's the whole value of the asset is based on the cash flows, it's subject to interest rate risk as well. So we have seen interest rates rising in the last 3 years, and that has also affected that. So, and the discount rates for calculating the price of the InvIT also increases. And when that increases, the price tends to drop. So a lot of factors need to be considered by investors when looking at InvIT. And government also is very keen on more and more InvITs being issued. Powergrid itself is looking to monetize about rupees 30,000 crores of assets the next 20 years. And the government is looking to spend heavily on infrastructure, and InvITs are a key vehicle for that, for their funding their investments. Hence, government also has to do a lot of educational work with investors, especially retail investors who really don't understand how InvITs behave. Institutional investors can take the risk. Hence, platforms like us are here to educate people and also enable more and more visibility on such InvITs. And we have there are many InvITs that have issued bonds as well. Many of them are AAA rated. These bonds are available at around 7.5 to 8%, and Powergrid bond itself is available in a range of 7.5 to 8%. So if InvITs are too volatile, investors can look to invest in AAA rated Powergrid PSU bond. So that's about it on InvITs. So investors have to watch out for many things on InvITs. One, how long will the cash flow sustain and dividend yield sustain? How is the performance of the assets? How can the company buy more assets and grow? And then leverage, they're able to do that. And they should not get carried away by the price rise in the markets, in the equity markets. Thank you very much for listening in. And if you're a financial advisor, the best place for you is INR Bonds partner portal. Log into INR Bonds, become a partner, see the best bonds available for your clients, easiest of transaction process for your clients, no risk in transactions, all through the clearing operations, most information, best price discovery in the market, and a lot more you can get. And watch your fixed income assets grow as you provide more alternatives to your investors on their fixed income portfolios. And download our app, Quick Invest by INR Bonds, for a curated list of bonds for easier decision making, along with the same transparency information and price discovery, and the easiest of in-app investment processes.
Attention financial advisors. Want to attract new business and customers? Offering a new asset class is the key. With debt mutual funds and MLDs losing their tax advantages, your clients need to diversify fast. Look no further than corporate bonds, the perfect solution for safety and good returns. Partner with INR Bonds for expert guidance and valuable resources to get started. Access a wide range of bonds on our portal and manage your client investments with ease. Visit partners.inrbonds.com today and unlock new business potential.